All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. And the first thing that I want to talk about is that more expert witnesses talking about Satoshi case with Dr. Wright versus Kleiman family estate, saying that the documents were backdated or modified. Says Dr. Matthew Edmond. So a transcript of an affidavit was recently submitted to Kleiman versus Wright court case, which shows that an expert witness found many flaws within certain documents filed in the case. The billion-dollar Bitcoin lawsuit, one of the most high-profile court cases in the U.S. because it involves 1 million BTC and self-proclaimed Bitcoin inventor Craig Wright. Since December 2015, the crypto community has endured Wright's repeated claims to be Satoshi Nakamoto. However, nearly every claim and every so-called proof Wright has provided has been debunked by researchers, cryptographers, and the greater crypto community. So on December 9th, 2015, Vice reporter Sarah Zhang detailed that the PGP keys referenced in stories naming Craig Wright as the creator of Bitcoin were probably falsely backdated. Fast forward to today, and Craig Wright is being sued by Ira Kleiman, the brother of the now deceased Dave Kleiman, for allegedly interfering with David's Bitcoin assets and intellectual property after he died. And the first filing shows the value of the assets Kleiman thinks David's was screwed out of is about 5.1 billion, or about half of what the value is, before punitive and treble damages. This week, an affidavit was submitted to the court that shows the testimony of the Kleiman estate's witness, Matthew Edmond, a cryptography expert. According to Edmond's resume submitted to the court, he has a deep knowledge of digital forensics, applied cryptography, and etc., etc. Edmond's testimony examines an email that was submitted to the court as Exhibit A. Edmond declares under penalty of perjury, of course, that he believes Exhibit A was likely created from an email Wright sent to himself on or about the 16th of April in 2014. The document was then converted to a PDF and modified to appear to have been sent from David Kleiman to Ewan and Nguyen, I think that's how you pronounce that last name, either way, on or about December 20th, 2012. The expert's testimony further states, I also determined that Exhibit A contained a PGP signature allegedly created by Dave Kleiman on or about March 12th, 2014, almost a year after he died. Typically pretty hard to do. Edmond states that he analyzed Exhibit A previously, and further analysis and forensic artifacts contained within the PDF itself bolster his opinion. The digital forensic expert said that he also examined Exhibit F and concluded that the document was created by further modifying Exhibit A to make it appear that as if Exhibit F is actually a separate email sent from Dave Kleiman to Nguyen. Again, I don't know. In my opinion, it is simply another revision to the PDF created from an email the defendant sent to himself on or about April 16th, 2014. And it goes on and on and on. And it's just interesting how much falsified documents there are in this case, or at least very, very questionable documents, and how it gets derailed constantly. And I've actually had a lot of people, every time I make a video about Craig Wright or follow up on this court case, I'm just trying to be objective as possible in reading the news. But every time I make a video on it, there's a bunch of sort of Craig Wright fans that come along, and it really reminds me of the Bitcoin Cash days, when Bitcoin Cash was supposedly, the real Bitcoin. You guys remember that, right? And then that sort of died off. It took about a year, but the whole Bitcoin Cash is the real Bitcoin thing sort of died off when everybody realized, well, nobody's really using it. There aren't many transactions on Bitcoin Cash, and there are way, way, way more on Bitcoin. And it didn't overtake its price. It didn't overtake its hash rate. It just isn't the real Bitcoin. And I think a lot of people started to realize that pretty quickly. And again, I think a lot of people sort of get on these bandwagons of the real Bitcoin or Craig Wright or something like that because they have bags of Bitcoin Cash or Bitcoin SV, and they can't have anybody in the community talking bad about them or talking objectively about them because that could lower their value. That could convince others, or it could create a runaway effect of their bags lowering. Well, I hate to devastate the bags that you are holding of crypto, but the truth is the truth. And now there's a Bitcoin SV bandwagon. And again, I kind of got derailed just a little bit there, but Now, every time I make a video on him, there's a lot of people talking about this, that, or the other thing with Craig Wright, that he's the real Satoshi Nakamoto, that there's all this evidence. No, there is no evidence. There is zero evidence. This is not religion. This is not faith. I'm not going to believe that a man is somebody who he says he is just because he says he is without providing a lot of proof. Now, in certain instances, if somebody says, hey, I've got 12 pairs of shoes at home, I might just go, okay, and give you the benefit of the doubt. But when you're saying you're Satoshi Nakamoto, the creator of Bitcoin, that is changing the world, that is something way bigger than that, I'm going to need a little bit of proof on that. And I've had people say, hey, this court case proves that Craig Wright is Satoshi Nakamoto, because he said in court that he is Satoshi Nakamoto, and the lawyers of the Kleiman case did not deny that. Well, here's my response to that, and I've already responded in comments to that. That is irrelevant. That means nothing. Whether he is or is not Satoshi Nakamoto, it is entirely irrelevant to the court case, and the lawyers on the opposing side are not going to derail the current conversation and the current debate on this Bitcoin. What the court case is about is that 1.1 million Bitcoin were mined, allegedly. And allegedly, again, Dave Kleiman is owed at least half of those Bitcoin. And again, allegedly, Craig Wright has all of the keys, or basically is hiding the keys, or cannot provide the keys to these to even give the Bitcoin in any way, shape, or form. So again, the lawsuit is essentially over money. If I owed you $1,000 and you took me to court, well, that would be small claims court, but let's just go with the example. I have to give you $1,000. Just because I say, hey, I'm an architect. What does that have to do with the court case? It doesn't really have anything to do with it at all. Or if we created a business together and I'm like, I was the creator of the business, so I don't owe you $1,000. What does that have to do with me owing you $1,000? It has nothing to do with the court case. And because the lawyers don't deny that he is Satoshi, or actually approve that he is Satoshi, simply means that they don't want to derail the current argument that they're trying to get for their clients, and the money for themselves, of course, because they need paid. So again, no, this proves nothing. So all of you in the comments, no, it does not prove that he's Satoshi Nakamoto because the lawyers deny it. They don't deny it because it has nothing to do with the court case. Whether he is Satoshi or is not Satoshi, he allegedly, according to the defense, the plaintiffs say that they owe him about $5 billion in Bitcoin. It has nothing to do with him being Satoshi or not Satoshi. So get off that horse. Bitfinex says it's paying back its investors, but won't give any exact figures. So a friend of mine actually gave me this article. GooseTech actually sent me this article. Go check out his YouTube channel. He's a great YouTuber. Bitfinex, the world's largest exchange by trade volume, claims it is an undisclosed portion of the revenue generated from a token sale on its platform to pay back the $850 million debt that it owes its sister company, Tether, because, Bitfinex and Tether, they got into this $850 million situation where they gave it to all these capital, and all these banks in these different countries seized that money. And they seized a total of $850 million. And so therefore the Tether is not backed any longer by that amount of money. Now, there's about 3 billion or something like that in Tether floating around, or 4 billion or something along those lines. So 850 million of it is essentially not backed. So this is no longer an argument. It is not backed currently, and they're desperately trying to get that back. So this happened in like April, when all this came out about Bitfinex and Tether not actually being fully backed. So the exchange borrowed the $850 million from Tether's reserves last year, the exchange's shady payment processor, Crypto Capital, and it had its funds seized by several foreign governments. Ooh, nice payday for them. In an attempt to make both companies whole, Bitfinex ran a token sale of the cryptocurrency LEO to cover the losses, reportedly selling $1 billion in total. The LEO functions as a debt instrument. Bitfinex raises money by selling the token to investors and supposedly pays them back by using money gained via other streams of revenue. Nice little Ponzi. Bitfinex claims to have so far paid back to Tether $100 million as a result of the LEO sale. So they just pocketed that $900 million. Like, screw that $850 million. Busy. Let's just pocket the money. And it says it's already buying the tokens back from investors to pay them back. It says it has used 27% of the revenue generated from another token sale run by a crypto startup called Ampleforth on Bitfinex's proprietary TokenX platform, which raised $5 million in 11 seconds last month. Nevertheless, Bitfinex won't say how much money is actually involved, nor how the revenue was even generated. When asked, Bitfinex spokesperson Kaspar Rasmussen said that revealing this information would impact future IEOs on their platform. I'm sure it would, just like firing your auditor when Tether wanted to, when everybody wanted Tether to be audited. Just makes no sense. But there are some clues. A source familiar with TokenX, Bitfinex proprietary token launch platform, said Ampleforth did not have to pay Bitfinex up front for the token listing, but did incur a success fee for its successful raise, worth an undisclosed percentage of the amount raised. It's possible to get some of the sense of the revenue by looking at the LEO burns on Bitfinex's transparency page and extrapolating backwards. $38,000 worth of LEO were supposedly be burned. If the LEO burned is 27% of the revenue generated, it suggests revenue of around $150,000 from the Ampleforth token sale. And we don't know if this is the full amount, but it's probably not far off. Given the Ample token's trivially small daily trading volume of just 220,000, if Bitfinex extracted its standard 0.1% fee, it would yield 33,000. So chances are there are also a lot of hidden costs and undisclosed transactions involved in the repayment. It might just be that Bitfinex is dissembling as it awaits further response from state authorities over its failure to disclose insolvency to investors last year. So essentially, they're still working on a Ponzi scheme, and I don't know. I really feel it's almost like a too big to fail at the moment, as Tether is nearly like 50% of the daily volume of crypto trading. It's on basically every exchange, and if it just disappeared, well, you know, I've heard the arguments of saying like, well, you could get rid of Tether, and we have other stable coins, but the problem is you can't get rid of Tether. The only way to get rid of Tether is that every single person holding Tether tries to cash out on whatever platform that they can cash out Tether to US dollar or euros for. That would be the only way to really get rid of it. Otherwise, you can't, because you could say, okay, well, I have Tether now, I'll get rid of it, I'll buy Bitcoin. Well, by buying Bitcoin, I sold my Tether to somebody else. Now they have it. So it's essentially just a hot potato. And no matter what, somebody is going to be holding it. And when it goes under, a lot of people that are holding it are going to go under as well. Now, is it going to go under anytime soon? Probably not. But this is clearly like very Ponzi-ish. Oh, we'll just sell our old LEO token, or we'll sell our old tokens to pay back these new investors of this new token that we sold. Well, why not just pay them back some of the $1 billion that you raised, because it's from revenue generated from elsewhere, but clearly it's from a token that you sold a while ago. So again, it's getting even more confusing. And I think eventually it'll pop. I don't think it'll last forever. I really don't. I don't think I've ever held Tether, and I prefer never to hold Tether. I don't feel like it's a very safe investment. For short-term trading, yes, but other than that. So moving on to Fed's Jerome Powell calls for a halt to Facebook's Libra currency project. So does this sound familiar? Well, it shouldn't, because it's kind of new. However, congressmen were saying that we should put a halt to the Libra currency project. And the Federal Reserve of the United States is essentially the central bank of the United States. And now they're saying that you should put a halt onto it. So Congress and the Federal Reserve saying to put a halt to Libra currency's project. So governments all around the world are fearing this project a lot and are demanding that they stop. Even I think the European Central Bank said that they don't want it in Europe. They want it to stop. China doesn't want it in China. So we have China, we have the European Central Bank, we have the United States Central Bank, as well as the United States government congressmen saying to put a halt to Libra coin. So I wonder if this is going to go forward. And here's the problem with this, is that it's a centralized coin. So you might be able to say, well, you can't stop cryptocurrency. Well, you can certainly try, okay? And, well, that might be so with Bitcoin. You can't stop Bitcoin. Well, but governments can certainly try. And when China banned exchanges in China, that certainly had that massive effect on Bitcoin from 5,000 to 3,200 back in September, I think, 2017. So they can certainly do some damage to cryptos. However, with Libra, it's very centralized, and we have these major corporations that are participating in the masternode of Libra. So we have like Uber and all these other corporations, and they all put in $10 million to run a masternode so that they can get an investment, so they can get money back on their investment, so they can essentially get interest on that $10 million master node. And if the governments really wanted to, they could send a cease and desist, because now they know who is running these master nodes. Now, it's not just like I'm running a Bitcoin node in my house and the government could never know about it, or I could be running a Bitcoin node in Iceland or Russia or China and nobody could ever know about it. This is centralized and everybody knows what corporations are going to be running this node, and they could receive a cease and desist letter and this whole project could shut down. That's going to be highly unlikely, in my opinion, once the 2 billion Facebook users start to put tens of millions of dollars into Libra coin so that they can spend these, even though they could just use their debit card. I still don't understand the point of Libra coin all that well, but fair enough. So Facebook's Libra coin faced a backlash from U.S. Federal Reserve's chairman, Jerome Powell, who believes the project cannot go forward unless serious concerns are addressed. With this statement, Powell joins the side of most international regulators, both central banks and financial oversight authorities. The prevailing opinion is that Libra may be a threat to the monetary policy and to commercial banks and personal finance. Libra raises many concerns regarding privacy, money laundering, consumer protection, financial stability, Powell said during the semi-annual testimony on monetary policy before the U.S. House of Representatives Financial Services Committee. I don't think the project could go forward without addressing those concerns, he added later. So again, they want to regulate it. They really, really want to watch this coin. Powell added that Libra does not fit within the Fed's regulatory scheme and has potentially large-scale impact. Oh, and let me just throw another one on there. I saw an article that says Libra is not allowed in India. They're not going to... or at least Facebook is not going to put it in the India market because it's against their regulations. So again, that's just another one. India, financial regulators all around the world, central banks, governments, China, nobody wants Libra coin. It's amazing the amount of heat that Libra coin is taking, and it doesn't even exist yet. Powell added that Libra coin does not fit the Fed's regulatory scheme and has potentially large-scale impact. The Libra Association has stated multiple times that it is open to discussions, and Facebook has held preliminary talks with the U.S. Commodities Future Commission. But again, I don't think even governments don't trust Facebook. That's scary. Governments are like, hey, like Facebook's like, hey, we're open to discussions. And the government's like, I don't think it can go forward. They don't even want to touch this. They don't want to touch this with a 20-foot pole. Nobody does. They're just trying to threaten Facebook. Nobody trusts Facebook. The people, governments. So Libra will supposedly have a fixed price based on a basket of international currencies, and will be backed by fiat, held by specially assigned sellers. Oh, definitely specially assigned sellers. Of course they will be. During Powell's speech, the price of Bitcoin accelerated its drop, adding to factors that wiped out 1,600 in just one day. Previously, Facebook's announcement gave BTC a boost for one of its previous rallies to nearly 13,800. And I'm not sure if it was Facebook that was necessarily boosting it, but that's pure conjecture right there. It's pure speculation that it's Facebook that is moving Bitcoin around and not just like the RSI peaking out and people starting to realize, hey, it might not get over 14,000. Let's start selling. And then people are like, I don't want to buy in here. And this group of people are like, I don't want to buy in here. And so everybody starts going, we should probably sell now. That's the market sentiment, not Facebook. I don't know about that. Currently, it is still possible for any startup to create a digital asset, but Facebook's high profile combined with concerns about privacy because they suck and influence are weighing down the Libra project. So far, no other digital asset, including Bitcoin, has received similar attention or attempts to freeze the project. The potential of Libra to immediately reach more than 2 billion users is also causing worldwide concerns. Recently, it became clear Calibra, the chief of Libra wallet, would not be available in India to avoid breaking local monetary control laws against the gray economy. So, yeah, nobody wants Libra coin. Moving on to CoinMarketCap here, $309 billion market cap. We are still going down, and, the other day at the end of my video that I had made, I was talking about sort of this little dangly that we were seeing on everything, and really it's just sort of a dead cat bounce at the moment. And not to say that it's guaranteed to go any lower, but right now, with the sundering of the Bitcoin price at 13,000, nearly 12,000, we're going way down pretty quick here. So we have some big losers, pretty much nothing in the green, likely only stable coins in the green as people are trying to sell. We have some goofy coins up top, but those are just good luck on those. But losers of the day, Bitcoin SV, Qtum, Bytom, Dent, VeChain, taking a huge hit there. But other than that, nothing really else to say today. But make sure you guys subscribe to the channel, like the video, share the video. My social media in the description below. Check that out if you get the opportunity. And as usual, hope you guys enjoyed it, and I will see you guys next time.